You're listening to AI PRISM from Seoul Economic Daily.
3 numbers that should worry anyone holding Korean assets today. Nvidia just locked in a $50 billion data center lease, and circular financing fears are back. Korea's Kospi crashed more than 10% today, triggering the market's third circuit breaker this month. A Chinese state-linked firm just started building its own lithography equipment, and Washington and Seoul just found a $200 billion reason to build LNG plants together in Texas. It's Wednesday, July 29th. Here's why global investors are paying attention to Korea today. Nvidia has agreed to lease Hut 8's entire 1 gigawatt Texas data center for up to $50 billion over 30 years, deepening its role as both chip supplier and infrastructure backer. On the same day, reports emerged that a Chinese state-linked firm has begun producing immersion DUV lithography tools for domestic memory makers. Together, the two stories reignited fears that AI chip demand is inflated by circular financing, and that China's chip self-sufficiency is arriving faster than expected. Here's what the numbers show. The Kospi dropped 732.09 points, or 10.84%, to close at 6,023.66, its third circuit breaker this month. Samsung Electronics fell 13.39% to 220,000 won, $159, and SK Hynix dropped 14.65% to 1,555,000 won, $1,127, the sharpest one-day semiconductor sell-off of the year. Nvidia's 5-year credit default swap premium jumped to around 0.82%, up from a 0.35% to 0.50% range since December, pricing in fresh circular financing risk. Foreign investors sold 4.97 trillion won, $3.6 billion of Korean stocks, while retail investors bought 4.33 trillion won, $3.1 billion the same day. Citadel Securities forecast a surprise Fed rate hike on July 30th, a move that would raise funding costs for CapEx-heavy tech firms. So what does this mean for global investors watching Korea? Earlier, we said Nvidia's $50 billion lease revived circular financing worries. Here's what that actually means for you. If AI infrastructure spending is being financed in a closed loop between chip makers and their own customers, real demand may be harder to verify than headline CapEx numbers suggest. For now, that argues for watching upcoming earnings from Samsung, SK Hynix, and big tech hyperscalers for hard evidence of order books, not pledged CapEx. 3 things to watch. First, SK Hynix reports earnings on July 29th, followed by Samsung Electronics on July 30th. Second, the FOMC decision lands July 30th, with Citadel already flagging surprise hike risk. Third, Alphabet's CapEx guidance, already raised to $205 billion for the year, will set the bar for how markets judge the rest of big tech's AI spending this earnings season. That's today's AI PRISM, Global Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a WAN-IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.